Equity release. There are a lot of misconceptions about equity release. In this video, I'm going to run through the pros and cons of what equity release actually looks like in this day and age. Let's go. So, the first con that we're going to go for is that you do have to be over 55. Now, that might be a con for some, but the pro that goes with that is you can actually be anything over 55. In fact, the older you are, the better for equity release. To the lender, the older you are, the less likely you are to have the equity release for a long period of time. So as the interest compounds, the less likely that is to go to a point where it's high risk for the lender. So in fact, the older you are, the better. Now, another con is compound interest. Now, it doesn't necessarily have to compound because you can make payments, but if you don't want to make a payment and repay the loan that you take on the property, that interest does get added on and interest does get charged on the interest. So if you don't pay anything, it can stack up pretty quickly. Now, the benefit is you can make those payments if you want. The choice is yours, and it actually makes it really flexible. If you don't want to make any payments, then don't. But you know that there is compound interest happening in the background. If you do, you can treat it like an interest-only mortgage so that the equity release doesn't actually increase over time at all. You can even make overpayments like a regular repayment mortgage as well. Another slight downside of equity release is that the interest rates are slightly higher. Traditional mortgage at the moment, around 4.5%. Equity release, you are looking in the 6%. But the benefit that goes with that is that you can fix that for life. There are not many mortgages out there that allow you to fix for the entirety of the mortgage. And with equity release, if you take it out at age 55, you could have that for 30 plus years. So to fix for life at those sort of rates isn't a bad thing at all. Another thing is that the setup fees for equity release do tend to be slightly higher than a traditional mortgage. Because the rates are fixed for life, you can pay a one-off fee and never touch it again. It doesn't mean that you can't review it, and if rates come down in the future, you wouldn't be able to take advantage of that. But it does mean if rates do start coming up in the future, you've made the right decision and you fixed for life early, so you're going to be on that rate until that mortgage ends. Now let's add a couple more into the pro category. Years ago, when equity release first came to the market, there was that worry that you could go into negative equity. That would mean that the loan you've taken on the house grows, so it's actually higher than the house value itself. So if you were ever to sell the property, you'd still owe the bank money even with the full value of the house. Now, with the Equity Release Council regulating everything more closely, you can't. Equity release products now do not let you go into negative equity. So another little benefit of equity release that you might not know, it is tax-free. If you pull out £100,000 from your property, it is tax-free. The last couple of pros for equity release are that there are no affordability assessments with this and also no credit scoring. Unlike traditional mortgages, these are normally huge factors, but for equity release, they don't get factored in at all. Hopefully this clears things up for you and you can decide whether equity release is right for you. But make sure you speak to an advisor, as everyone's circumstances are different and no one's going to receive the same advice. There are plenty of other details involved with mortgages which we'll be covering off in future videos, so make sure you follow the page for more mortgage content.